Welcome back to the Florida CME Group here in Chicago. 2nd of March here, folks. We had a tumultuous day yesterday. Let's get into the zone, the CMZ zone. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms with overnight cash management. Big down day in the equities yesterday. Obviously, all eyes continue to be on oil. This Middle East situation that continues to escalate and continues to grow from, obviously from Tunisia to Egypt, but now we're actually talking about the Saudi situation. So as this situation decides not to go away and exponentially grows, all focus is there, and crude oil is now above $100. And actually, if you caught my Bloomberg spot yesterday, that was actually the topic we were talking about. At what price of oil is it starting to become damaging to the equity market? And we went back and forth. One guy said 120. I said at $100, it is problematic. Due to the fact, I had a colleague share this bit with me, but for every 25-cent price hike at the pump for us consumers, it's $1 billion a day more in consumer tax. Now, you don't have to be a mathematician to figure that out, but you're talking a 50-cent price hike. We're talking it's going to wipe out QE2 over a year. That is a sensational number. And you look at this week, $3.38 was the actual average, the nationwide average per gallon. It's up 19 cents in 1 week, folks. That's a big move. So if we see another 20% move in oil, this could really take a bite out of the consumer. So let me know, comment here on this video, what price is oil dangerous, or get me on my Twitter account @TheKiller. ADP this morning, we had a positive number, but that ADP number, it's such a wild card, folks. I don't know how much merit you really want to put in that, because it's been off, it's been accurate, it's been way off, it's just all over the place. But it did come in today with an expectation of 175,000 positive new jobs. It came in at 217. So we'll see. We're all looking Friday. That unemployment number is big. And I think that brings me to my next point here. The market is at a fork in the road. They really are. And actually, Ben Bernanke is kind of sitting there on the corners looking both ways. And he's actually being prepared. Clearly he wants to put his foot on the brake and curtail QE2, but I don't think that's going to come to fruition. They're going to let the QE2 go all the way through, and in the situation where the market really gets beat up here over the next couple months, they're prepared to go QE3. I don't think that's a possibility, but Ben Bernanke has that in his arsenal, no doubt about it. He is being reactionary, and maybe needs to be a little more of a leader in this situation, but right now he is straddling the fence and being reactionary. Let's drill down on these treasuries. We just had another test this weekly pivot in the 30-year, 119.26. It was a great pivot yesterday. We saw it bounce off that, and they came and grabbed that 30-year again. And I think that continues to be a red flag when these bonds, they will not relent. We actually had a down day going into it yesterday, but they came back and continued to buy the treasuries. So we'll see. I think that's an indicator that maybe that damage yesterday could be sustained. However, the S&P, let's talk S&P here. They had a nice bounce down to the low at 1296. We currently just tested 1375. So I think with Warren Buffett on this morning talking, I think some coattails were ridden on that. And this, this ADP number, we saw a little bit of a pop up here, a retracement after an absolute beat down yesterday in the S&P. The bulls really had the bears on the ropes yesterday, folks. They got them up to 1336 in the S&P. Came off that number during the testimony. We went to that 1318 level. I've spoken to this 1318 level many a times, and it was a great move yesterday. Initially tested it, popped off, and really trapped some people. Got some people long up there, and then the stone just dropped. We went all the way down to that 1308 level, which has been, the killer. A friend of me told me it's not the killer pivot, it's the killer magnet. And you're right, that 1308, the market continues to go there. Rolled back under that, and overnight we actually tested that 1296. So currently we're sitting here, and I feel like this market is trapping some people long here. The market wants to come off a little bit and test it, but it's all looking at oil, folks. So if oil continues to move up, they're going to hit these equities. Watch your eye on that. The euro currency, we had a 137.42 all the way up to 138.90. Kind of a muted trade, despite the fact it's up another penny. But I really think they're looking at oil. I think the ECB, as well as the Bank of England, has their finger on the trigger to hit those rates. But if oil goes up, they cannot raise those rates right now. So from the Florida CME Group, good luck trading today. Remember one thing, be the hammer, not the nail.